We're the only fund that focuses exclusively on blockchain and crypto business.
I still remember the conversation we had 17 months ago. You said, look, Brian, I'm not the guy that's going to get you 100x. I'm going to get you 10x, and I'm going to invest in companies with revenue. It was not what people wanted to hear when Bitcoin hit its high in November, but then fast forward 18 months, you're looking like one of the savviest investors out there.
We are investing at the growth stage. We're looking to invest in companies that are going to be able to withstand the bear phase. A company like Animoca made more revenue in 22 than in 21. Think about that for a second. You had a massive bear phase in the cryptocurrency markets, and here's a company that actually did better. Of the 26 investments, we only had one that was impaired. It was only 2.5% of total assets.
I think you had a term where you said under the hood, there's a lot going on. All of these things are growing and building. The price of Ethereum can stay the same, and they're still going to create hundreds of millions of dollars of value.
We try to pick established companies that are making big chunks of revenue because they have the flexibility to take that risk, add that business line, buy that small company that could be building the future.
You plan on just introducing synergies between all of those companies. You can create a ton of value for your portfolio companies.
We are going to be very focused on helping bring some of our companies to the public markets. 5 years from now, Coinbase is not going to be the only public crypto blockchain business in the world. 10 trillion is what I call would be the value of the digital asset ecosystem, which is the value of all the cryptocurrencies and all the equity in the space.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Dan Tapiero, the global macro investor, entrepreneur, and business leader. You are the CEO of 10T Holdings, a growth equity firm with $1.2 billion under management that has built a diversified portfolio of private companies which are enabling the digital asset ecosystem. You have 30 years of experience in macro investing, trading, research, and economics, and have worked as a portfolio manager with the world's most respected investors, including Stan Druckenmiller, Stephen Cohen, and Lord Rothschild. You previously described Bitcoin and blockchain technology as historic inventions akin to the birth of the combustion engine that will transform our world. Recently, you've said that your initial estimation of a $10 trillion market cap for crypto was conservative and that it could be double that, or $20 trillion in the next decade. You're now in the process of raising an additional $1 billion for your new fund, One Roundtable Partners, in order to invest in mid to late stage digital asset ecosystem companies. Dan, welcome back to London Real.
Hi, Brian. Great to see you. Again, that was nice seeing you also in Paris. That was fun.
Yeah, it was great to catch up. And look, I can't wait to dive into this. Super excited to talk to you. Before we get started, just want to say if anyone's interested in learning more about your new fund, One Roundtable Partners, they can go to londonreal.tv/Dan for more information. Here at London Real, we will be investing in One Roundtable Partners via London Real Ventures, and you can learn more about us at londonreal.ventures. Dan, we caught up in Paris, and I got to say, you were glowing in Paris. Like you were on your game. You told me you just deployed over $100 million of capital in Q4 into 7 different businesses, you know, while everybody else was pretty much licking their wounds. And I just want to say, like, how were you able to do this when everyone else was, you know, doing the opposite in Q4 of last year?
Well, I don't know that everyone else was doing the opposite, but there was a lot of panic, as you know, after the FTX fraud. And, I was talking yesterday with one of our LPs, who's an old-time commodities trader, and he noted the same thing I did, which was that, again, on the announcement of that fraud, the Ethereum price couldn't go down and make a new low. The Bitcoin price went down, made a new low, but then sort of popped right back up. And, if you've been trading in the markets a long time, like we have, those are telltale signs for a market that's sold out. And what that just means is, if a market can't go down and make a new low on what is probably the worst news that you could possibly imagine, it just tells you the selling in the bear phase, it's either petering out or it's completely done. And he took the same signal as I did, watching the market very carefully. It held in very well. And again, we make 10-year investments. It's a 10-year life fund. I'm not trying to market time our purchases, but I can't take that macro hat off completely. And when I think there's a low in the space, I want to deploy a lot. And when I think that there's too much froth, what we tend to do is we just back off and pass. And last year we passed on over 100 deals. And that was largely because, the valuations were so crazy, 50, 80 times revenue for some of these businesses in our space. But so I wouldn't say I was the only one, but that signal was pretty clear. And I thought, okay, everyone is panicking. And there are a lot of businesses that we really like. Of the 7 we bought, 4 were in the secondary. And so you have people, whether they're seed investors who just want liquidity or funds that invested in the space that are pulling out a little bit. We were able to buy in the secondary at a 50 to 80% discount from previous rounds. Now, just to be fair, some of those previous rounds were, hugely overextended. But still, good valuations. And I still see them. The market is still there for a lot of those ex-high flyers. And in the 3 deals that we led, there really wasn't that much competition. So we could set the price. And so I think, last year you had some of the very large private equity funds that came into the space, 21, 22, deployed big capital. And I think they're just used to buying sort of SaaS tech businesses, which you can put a very high multiple on. And I kept saying to my guys, but to some of them as well, the underlying asset in the crypto blockchain space is Bitcoin and Ethereum, and they have 100% volatility measurement. You can't value these like traditional tech companies. You're going to have 3 pretty massive bear phases over a 10-year period where the underlying asset goes down 80%. You have to have a bit of a defensive premium baked in there. And so we didn't really pay on the 26 businesses we've invested in, the $1.2 billion we've deployed over the last 2.5 years. We haven't paid more than really 10 to 12 times revenue when we entered them. And so that metric is just a metric that we use and really thankfully saved us from making lots of mistakes last year. So I would just say that in the beginning part of the year, there were quite a few signs of, it's just overvaluation euphoria, and we pulled back. And then when I saw the markets were holding in well like that, I just thought, let's deploy the remainder of our fund 3. So it was a little bit of old time macro feel, a little bit of like, let's stick to our valuation metrics and process. So yeah, we were quite fortunate in that regard.
Yeah, I love it. And I still remember the conversation we had 17 months ago where you said, look, Brian, I'm not the guy that's going to get you 100x. I'm going to get you 10x, and I'm going to invest in companies with revenue. And you started listing the companies, Deribit, Ledger, Yuga Labs, Animoca, Kraken, Gemini, Nova Labs, formerly Helium, and it goes on and on. I mean, these are the best of the best in this space and real infrastructure plays. And it was not what people wanted to hear when Bitcoin hit its high in November, But then fast forward 18 months and you're looking like one of the savviest investors out there. And it's just really interesting because I still remember you saying that to me, like, I'm the one that's going for the 10x returns. And
well, 5 to 10x.
5 to 10x, right.
10x on the portfolio over a 10-year period. We have to, but it's definitely not a venture strategy, which I always say is make 10 investments, 9 go to zero, when one ends up being Google. But no, we certainly do. We look, we are investing at the growth stage. We're looking to invest in companies that have, minimum sort of 30 to 50 million in revenue. Businesses that, are going to be able to withstand the bear phase. We had one last year. Of the 26 investments, we only had one that was impaired. It was only 2.5% of total assets. So it didn't really impair us. And that was partially, why I had the sort of wherewithal and comfort to be allocating in Q4, because we didn't really feel all that pain that was in the rest of the space. And certainly many of those liquid hedge funds that have to mark to market every month. I mean, I was in that business in the macro world for a long time. And, I lived through tremendous periods of pain. And I think the skill really is to get exposure to the space, to the growth and the overall value of the digital asset ecosystem, but without the volatility or, that other people are experiencing. And so, some people have said it's a sleep well at night strategy. Yeah, I mean, I do think the portfolio is going to make us 5 to 10x over that 10-year period. And we're not going to be the best performer in the space. But it's a bit strange. I still feel we're the only fund that I'm aware of that focuses, the only growth equity fund that focuses exclusively on blockchain and crypto businesses. So it gives us a little bit of an edge. We've sort of built our own ecosystem now. The companies that we're looking at for the fourth fund that I'm doing are going to be plugged into that ecosystem. And you can see what all the companies are on my website. I mean, they're all right there. And you're right. I mean, I feel like those are core companies to the ecosystem. We're going to come back 5 years. They're all going to be, still around and thriving. So
it's wild because completely independently of our relationship inside my crypto and DeFi Academy, like literally I just kicked off my class, my 4-week class, and they're buying Nano Ledger X's to set up their hot wallets. By module 4, they'll be buying a call option on Ethereum on Deribit. And it's just wild. I mean, we've had Yatsu from Animoca Brands on here. It's just wild how your investments are, they literally are key infrastructure in this entire ecosystem. And that's just me choosing the right things for my students to use. And it happened to be your investment. So I don't think there's a coincidence there. I think you looked at those things and chose. And like you said, you're the only one doing that in this space.
Well, I was, it's like a blue chip strategy in a way. I mean, the difference really is that, I don't know, I seem to be the only guy out there who thinks that there are blue chips in the digital asset ecosystem. I mean, these are companies in some cases making hundreds of millions of dollars of revenue. A company like Animoca made more revenue in 22 than in 21. If you can, think about that for a second, you had a massive bear phase in the cryptocurrency markets. And here's a company that actually did better during the bear phase. And we have actually 5 or 6 companies that did better in 22 to 21. So that really helps the portfolio. Obviously, the exchanges were all marked down 30 to 40%, and in some cases more. But when you have a portfolio, I think that, and then a portfolio that's seeking to get exposure to the entire space, not the whole space is dictated by the price of Bitcoin and Ethereum. And I think if there's one important thing, and you noted before we were chatting that, I was just on another podcast, and if there's one thing that I am trying to do now is a little bit is change the narrative with people. In the U.S., the regulatory rhetoric has gotten, very negative. But then all of a sudden in the UK and Hong Kong, Singapore, Dubai, Abu Dhabi, the interest has picked up. And, that Paris meet that we did was the end of a 1 month long trip that I'd done. And, changing the narrative, really to let people know that there are a lot of things going on in this space. I call them sort of subsector activity. And that subsector activity did not exist at the end of the previous bear in 18, early 19. And what am I talking about? I'm talking about, there was no DeFi, 2.5, 3 years ago. Today, you've got 50 billion TVL or whatever the number is. Last year, you had $8 trillion of stable coins settled. Okay, that's in a bear phase. That hit an all-time high. 3 years ago, there were no stable coins. You've got a massive NFT market that, despite the ups and downs, I think is thriving, did not exist 3 years ago. And so when I say, when you mentioned earlier in the podcast, the 10 trillion and the 20 trillion number, that's 10 trillion is what I call would be the value of the digital asset ecosystem, which is the value of all the cryptocurrencies and all the equity in the space. And when I had the idea for my first 3 funds, 10T, that was about 300 billion. And today we're at 1.7 trillion. The high was 3.2 trillion. But just think, we're still up over, 5 times in 3 years. Like, how many people have assets in their portfolio, certainly that big, that go from 300 billion to 1.7 trillion? And I think it's bottomed out. And during the next bull phase, which I think to really pick up momentum in the second half of 24, 25, I think we're going to be punching up certainly over 5 trillion in terms of the total value. The idea for 10T was that we were going to hit 10 trillion in 10 years. And I just simply wanted to, have that marked somewhere. So I put it in the name of my fund. So that people wouldn't think that, me calling for a 30x in the value of this ecosystem in 10 years, is a bit nutty. I don't recall ever doing that myself in any other asset or asset class. But it just seemed sort of reasonable. But now as we get there are all these new areas that are growing up that I couldn't even imagine 3 years ago. Look, you have a DeFi Academy. That could never have didn't exist 3-4 years ago. And so, that's the difficult thing in this space, is to try to see beyond the outer perimeter. And we look to invest in CEOs that have the ability to pivot to that unknown. I think it's a very difficult thing. But you mentioned Animoca. I think someone like Yat has that ability. Pascal at Ledger, I think, has shown that ability. The twins at Gemini also, I think their purchase of Nifty Gateway was very prescient. I see that they're going to be doing some innovative things in the future as well. So, we try to pick established companies that are making, big chunks of revenue because they have the flexibility to take that risk and, add that business line, buy that small company that could be building the future. And it's a future that we're not even really sure about. So it's a little bit tricky. We have a pretty big venture component embedded within these more established companies. And so we get a little bit of that extra venture kick, but I don't feel like we have the risk, that having just straight out venture bets, that you have.
And I think it's important that we change that narrative because, like you said, up until 18, 19, the only thing to talk about in crypto was probably the price of crypto. Even back in 14, 15, 16, when I was interviewing people like Andreas Antonopoulos, the only thing that mattered was the price of Bitcoin. And everybody got conditioned to that. And I feel like a lot of the public is just like, oh, where's the price? And I feel like these days that is missing the point. Because I think you had a term where you said, under the hood, there's a lot going on. And I was having this conversation with one of my students the other day. I said, look, the price of Bitcoin can stay the same for 2 years. And the companies that we're investing in are going to do incredible things. And again, We've just invested in a company called Vatum that's building metaverses for Fortune 100 companies where a customer can go into a metaverse like Frito-Lay did for the FIFA World Cup, and they don't even know they're in a metaverse. They don't know they're connecting to a digital wallet. They're just having an amazing experience where they own things and they're in a social atmosphere. And they're building these things. Same with Orange Comet is building metaverses for things like The Walking Dead and Scottie Pippen of the Bulls. And all of these things are growing and building. And the price of Ethereum can stay the same. And they're still going to create, hundreds of millions of dollars of value. And so, but you have to communicate that narrative, because I think the public, which maybe means your congressman, is still thinking it's about the price of a crypto asset.
Yeah, and trading. And it's not just about trading.
No.
And, they're like, 32-year-old bros pumping and dumping tokens. And, unfortunately, there are bad actors in the space. We saw that with FTX. The ICO boom and bust, there are many bad actors, people pushing those kinds of tokens on sort of unsuspecting people. I mean, it's unfortunate. They're, with creativity and entrepreneurial activity and sort of a open playing field, you're always going to get some bad actors. But what's incredible is that some of the regulators in the US are just hyper-focused on those handful of incidents rather than what's going on in this broader ecosystem. Some of the things you mentioned are spot on. I mean, Starbucks and Polygon relationship, that's incredible, right? Like the thing that, I think we talked about a little bit, the California DMV, using the Tezos blockchain.
Yeah, talk about that. Because you told me about this in Paris, and I was like,
I know. We did a little more digging. Look, it was an announcement. We think it's happening. Someone said to me, "Oh, Dan, that's fake news." And I'm like, no. My analysts and I, we dug into it. It's not fake news. They have, partnered with a company that is going to put, California state licenses and title deeds to your car on this Tezos blockchain. And, we've dug a little more. Not exactly sure specifically why Tezos, but there must be a specific reason that chain has, there's a specific use case. I mean, as you know, all these different chains are trying to optimize for different things. And I think I do think it's important to highlight to people listening that, look, Bitcoin and Ethereum are different in my mind than the other chains at this stage. They've reached network effect. Bitcoin is pure collateral, is unpenetrable. It is a security apparatus. I do think it is a store of value. It's been the greatest performing asset over the last, 10, 12 years, again, with a lot of volatility. I don't see that changing. And Ethereum, has been built for a little more flexibility and programmability. And, there's a huge programmer community now that's in the last 3 years come into the Ethereum ecosystem. And so, I think that there are many use cases there. Many of the NFTs are on top of Ethereum. And so I think those are proven use cases. And the other chains, it's a dog-eat-dog world out there. And the guys that can prove, their usefulness will survive, and 5-10 years from now, we'll have it established niches. I don't think we need to use Bitcoin for absolutely every single thing. You don't need, that being said, you have Lightning on top of Bitcoin, which is great for payments. And, they are adapting a little bit. But I kind of like the fact that Bitcoin is a sort of pure proof of work back, cryptocurrency, that the security of it is impenetrable, etc. But again, just to focus on that and to ignore all of these other developments. And I would say, what people are calling the Web 2 movement into Web 3, right? A lot of these traditional tech companies, corporations, they are trying to incorporate blockchain into their business models one way or another. You have even car companies, Fiat, for instance, what was the other Italian company that is putting all of their car parts on a blockchain? Maybe it was Alfa. I think it was Alfa Romeo. But anyway, the point is that 3 years ago, you had none of this, right? And so I'm this macro guy. I'm looking at things from, 20,000 feet. That's just my background. And I just see so much improvement, like so much innovation. And then every single day, the traditional press is hammering the space. Today, Brian Armstrong said he would consider moving Coinbase out of the US. Like that, I mean, we only have 3 exchanges, right? We've got Kraken, Gemini, and Coinbase. And Coinbase is the only real crypto, blockchain business that's public. I mean, aside from Galaxy, which is a little smaller, but to think that we are going to push sort of the preeminent exchange, especially for retail, outside of the US. I mean, it's almost a horrifying thought. I don't know what, I know you've been, I'm sure, involved in many of these discussions with all the people you speak with, but, that would really set the US back, I think.
Yeah, well, let's talk a bit about that because, for the past 60, 70, 80 years, the US/Silicon Valley has led pretty much every major technology adoption. Not only led it, but dominated it. And you might have actually brought this up maybe the last time you were here. And I've heard you quoted on another show and saying that now 85% of crypto trades happen outside the US. Obviously, you've got regulation coming in. Obviously, Gensler at the SEC doing his thing, Congress doing other things, Coinbase talking about leaving. And then you just went on this trip around the world. You went to Abu Dhabi, you went to Dubai, you went down to Australia, and you came back with some really interesting observations, Dan. And I'd love it if you could share it with us. One of the ones that really struck me was that you said down in Australia, they understand 2 things that maybe in America people don't, and it's crypto and currency. And I thought that was interesting because in America, you don't think about currency much because you're surrounded by dollars and nothing else matters. I think it was Terence McKenna that said, I don't know who discovered water, but it certainly wasn't a fish. And so you go to these other places and they get it. They're like, oh, I see the need for that. I see the need for this, especially Dubai, which is the city of the future. And they're building everything potentially to be on the blockchain. I think everything they do is digital in Dubai. Just maybe we'd love to see your reflections on what you've seen globally. And I know you're getting investors from a lot of these areas as well.
Yeah. Our largest investor base is in Australia, and there are a bunch of reasons for that. But you can walk down the street in Sydney and ask somebody where the Aussie dollar exchange rate is, and they pretty much know. And the same thing for New Zealanders. But in Australia, it's an entrepreneurial culture. If you think about it, a giant island. They're always looking out for new opportunities. There's a lot of wealth there. And also, they really get gold. There's a lot of gold in Australia.
Right.
And, if you understand how currency works, and you also understand why gold is an important asset, it's really just a little step to understanding Bitcoin. It's just a little bit of jump. But if you get technology, a lot of the guys they're like, well, okay, the internet, that was for information. And okay, the Bitcoin network and the digital asset ecosystem, that's for value and money. Okay, I got it. I literally have had conversations like that. Okay, I got it. And you're investing in companies that are building and growing up in that world. I'm like, yeah. And they're more established. Yeah. And so the conversation, there's no, there aren't so many, hoops to jump through. So many, in the US, you get all this talk. Well, what if it goes to zero? And what if it gets regulated away? And, it's a threat to the dollar. It couldn't be further away as a threat to the dollar. And why do I say that? The opportunity really is, these stable coins out there, they're dollar based. The dollar could become the digital asset, the key, the core. You have Bitcoin, that's an alternative, but the dollar stable coins, $8 trillion settled, you could have hundreds and hundreds of trillions settled in dollar stable coins. The U.S. should be pushing forward to be, to make sure that the dollar is the stable coin of choice, right? But the market's developed slowly. Well, I mean, slowly. I mean, it was 0 3 years ago, and now it's much bigger. But if the U.S. ever laid out a friendly framework, I mean, it would just explode. And I think some of the foreigners just don't understand, like, so Dan, what's really going on there? And I'm like, I have no idea. I mean, I don't know. I don't understand what all the hesitation is about. I've been saying this for 3 years. I mean, the first interview I did on this whole topic in the summer of 19, there's a big part of that was on Real Vision with Raul, was I just don't understand why we don't, I don't want to say weaponize this, but why don't we take advantage of this and, make sure that the dollar is in the middle of the digital value world? It's that, what? It's kind of happening on its own a little bit, but there is a possibility that it doesn't, that some other countries, a group of countries, take advantage. And, if they do, then so be it. The U.S., I've always believed in free markets. I've always believed in competition. And if the U.S. is falling behind right now, it doesn't mean it's going to be behind 5 years from now. We have an election coming up. I think having 80-year-olds running the country, I've said this a bunch of times, it's just not really optimal for us. But I think the foreigners, they're wondering what they get that the U.S. doesn't, because as you said before, the U.S. is led in technological financial innovation, and now they're, firmly at the back. Emerging market countries understand this concept even better. I mean, Bitcoin has a finite amount. Many of these currencies, emerging currencies, have, I guess, I don't want to call them supply schedules, but are being devalued dramatically by the fiscal and monetary authorities. I mean, you look at Argentina and, at some of the other emergers where, you have tremendous devalues, Turkey. Those populations are already bought in. They already understand it, get it. So I just think it's a matter of time, really, for the U.S. And so it's not really, I don't answer that question, oh, yes, this is a threat, right? The Financial Times still has a very backwards-looking perspective on this, as does, of course, the New York Times, the Journal, all these things. I mean, I don't really read the newspapers anymore, and people in our space, sort of don't. I mean, I don't, my kids haven't maybe ever read a newspaper.
That crazy. So, you don't read the Wall Street Journal anymore. You don't read the Wall Street Journal or the Financial Times.
No, I did I read the FT every single morning. It was required reading for all my analysts every day, probably for about 20 years and 25 years. And then it's just they're talking about old macro stuff. Yeah. Some central bank tweaking of array, the traditional macro cycle, traditional companies. It's all in the past, so it's very... Yeah, they feel like these... No, for me, I don't know.
They feel like these lagging indicators, and when they do dive on anything into the blockchain or web, it always seems like they don't really know what they're talking about. It's just way off. I read an article in the Times or these, and I'm just like, that's not what's going on. That's what people thought was going on a year ago, and that was wrong too. So, right. So they're not even a source for that information. So yeah, I don't read those anymore. Just while you mentioned it, speak briefly on the age thing, because you said something interesting recently that your daughter, she's 18, I think she's at NYU, and she had to go to the bank to get an apartment or something, and they needed some, registered check, and she was just like, I don't think there's banks here. Like, she didn't have a relationship with a bank. At the same time, you got, like HBS in Saudi, who's like 38 years old, and you got this group in the UAE that's a little bit younger that are looking forward, and then you got our 80-year-olds running this country that obviously have a completely different relationship with tech, with all of those things. Just speak on that wide range.
You've kind of described it. I'm just relaying what I'm observing. I don't have any bias necessarily against old people. I just see that, I go to Saudi Arabia, to Riyadh, and you can really feel the energy there. MBS is 38 years old, and there are a lot of super futuristic projects like NEOM, and people think potentially those are nutty. But whatever it is look, they're taking risks, they're evolving. I know women are now actively involved in running the government, whereas 5 years ago there were probably none. There's a lot of cultural change, and part of that is also thinking about future and future currency and future payment systems. They're just embedded. When you're 38, you can have a 20, 30-year view. When you're 80, you kind of don't. And, you're sort of stuck looking back. I don't think they really understand. They certainly don't understand the Satoshi white paper. I don't think even the concept of digital value, like what does that mean, right? It's so esoteric.
Yeah.
And look, it's not completely their fault. I mean, if I were 80 today, I'd have a hard time with it, right? I mean, I get it. That being said, there's a time where you just step aside, where you realize, look, I'm sort of out of the flow. My leadership skills, are not really great for taking us, to where we need to be over the next 20 years. But there's an entrenched group there of, I guess, boomer or whatever it is, a little older. And they're really stubborn. And I think, not really working at the best interest of the country. And you know what? It frankly doesn't matter. These other places will take the bull by the horn. And, eventually the U.S., I guess, will just come along. It's not really so much about like all these different nationalist things. I mean, we've talked a lot about the U.S. and non-U.S. But, you mentioned 85% of the total world trading volume is outside the U.S. This is really, and I've said this many times, the first truly global macro, financial phenomenon. There's nothing that, there's a person in every single country who has a digital wallet, who owns a currency across the socioeconomic strata. It really is sort of the most wide-ranging, I think, financial development, really since the uptake and usage, et cetera, of gold. I think gold is the only other thing that if you go to any country around the world, then they know what gold is, no matter how wealthy or how much of a, or whatever it is. I think that everyone knows about gold, but there hasn't been anything, even the dollar is, I don't think, is owned certainly as much as Bitcoin even today. So that's maybe a little difficult for us as Americans to handle, right? We're not really an outward-looking country. And look, there are a lot of great things happening in the U.S., so I get it. But this is a global development. And I also saw just in the news, too, that the U.K. is moving towards, this was today, more of a proper framework for cryptocurrency. So one thought in the back of the mind to have is, the 1970s, the Eurodollar market developed in London, not in the U.S.
Yeah. So,
this regulatory arbitrage, as some people call it, that London, has been, fighting to maintain relevance in the financial front for, I think always. It hasn't been sort of a global leader for a long time. But they do stake out like ground at the periphery like this at times. So wouldn't it be interesting if the UK, I started having some of my companies go public in the UK.
Yeah.
And then the US is all of a sudden, well, why are these American blockchain crypto companies going public in the UK? Like, shouldn't we be doing this on NASDAQ? And then the next thing you know it, the rules change. So that's what I mean when I say don't count the US out and that competition is healthy. Let these other places lead for now. It's happened before, right? It's happened before.
Yeah, I can only hope that happens. I still remember on my first day on the swap book at Bankers Trust in 1993 when they were explaining to me what it worked, the Eurodollar and the LIBOR. LIBOR stands for what? London interbank offering rate. Why is that in London? Exactly. Like this whole market evolved kind of under the nose of America and it became the standard. So yeah, it's a great example of how something can be developed overseas. You know, there's a lot of talk over here about crypto, but I don't see much action, to be honest. I just don't. And I think a lot of times our Western governments are caught up with so much nonsense in the politics system that they can't take action. And, you know, when I go to visit a place like Dubai, I was at the Future Blockchain Summit in Dubai last October. I'm going back this October. And I was blown away by that place. I was just so impressed.
Yeah, me too.
It's incredible. And I actually been there about 15 years earlier, and I was like, eh. And then you hear all the things about Dubai. Oh, it's just a bunch of buildings and and you get there and you realize, like, that's not true. There's a culture there. I mean, I'll be honest, Dan, more people stop me in the Dubai Mall to say, hey, Brian from London Real, than they do in London. You know?
No.
Yeah, it was crazy. Left and right. The first day I got there, some guys stopped me from...
Were you wearing that suit?
Yeah, well, I wasn't even wearing the suit. No, I think I was, actually. But like the first day I was there, some guys stopped me from Kuwait. They're like, we've been watching you in Kuwait. And I was like, whoa, this is getting weird. But like, super educated population. One thing I said about Dubai is that, you know, you don't see a lot of people... Like when you're walking around in that mall in that city, like people are there with a purpose. You know, nobody's phoning it in Dubai. Whereas if you go to a city like London, there are people here that are phoning it in. There, if you're there for a reason. Whether you're a cab driver or you're there in the service sector, or you're there as an entrepreneur, everybody's there. Everybody wants to be there because this is a place of opportunity. It's the city of the future. I sat down with Dr. Marwan Al-Zaruni, who was working at Digital Dubai. Now he's working on this outwardly facing to the world digital Dubai plan, where they want to basically encourage any company to do business there physically or virtually. I mean, they're thinking way ahead of the game. You know, everything is completely digital there, legit. The police department's off issuing NFTs, and you're in this place. And I pulled out my phone, Dan, and I was walking through the mall, and I recorded a vlog, and I recorded the vlog, and this title came to me, Dubai is what America used to be. And I thought about...
I mean, there is some feeling about that.
Something like that. I thought about my grandpa who
Hong Kong in the 90s.
Yeah, maybe that. I just thought about my grandpa who just, you know, he could go west in America. He could get land. He could build a business. There wasn't going to be the taxations, and he could just go do things that would grow the country. And I'm just curious what your thoughts are on Dubai and the vibe of the UAE and all that over there.
Yeah, I mean, Dubai is on fire. I mean, you feel it. It's a business culture. People move super quickly. You know, I think Abu Dhabi is also very forward thinking. I really, I mean, I have the exact same sense that you do. In fact, I'm going to be working with Henson Orser, who's the CEO of VARA, which is the Virtual Assets Regulatory Authority of Dubai. We're going to host, they're going to host, and I'm going to be involved with I guess we call it a symposium, a little bit of a teach-in. Going to be bringing a few of the CEOs of our quality larger companies to Dubai, and you know, we're going to have a fireside chat type of framework, and really the point is just to show people there that the space is large, it is growing. There are super legitimate, large revenue producing businesses, in the space. And I think they are the city of the future. I mean, the Museum of the Future, I'm sure you've been to as well there, that very cool building.
Yeah.
But, along with that, I think that especially in crypto, there are people there, sometimes they're peddling, and I do mean peddling a message that is not quite the right one, or not quite, let's just say, as legitimate a one as they should. And so I think we're really going to, hopefully, showcase the quality of some of the businesses in the space, and just highlight that by having some of the CEOs come and really explain what their businesses are, et cetera. But you're absolutely right. I mean, you feel the energy. Anybody you meet, they have the same feeling. And I would say it's Abu Dhabi and Riyadh as well now. I know that's a bit strange. Some people think, well, that's not what they think of Saudi or Riyadh, but it also is really.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.